For over half a century, the world has lived within the greatest economic illusion ever conceived, the belief that wealth can be printed out of thin air. We have been told that the gold standard is a barbarous relic of a primitive past. Yet today, the very institutions that dismissed it are hoarding the metal at a pace not seen since the height of the Cold War. Beneath the surface of our digital bank balances and global stock markets, the pillars of the post-1971 financial order are trembling. You're witnessing a silent, desperate return to the only form of value that has survived the rise and fall of every empire in human history. The fiat experiment is reaching its mathematical limit. And the world's elite are quietly preparing for the inevitable, the return of the gold-backed reality. Context and stakes. Why does this matter now? Because we are currently trapped in a $300 trillion global debt bubble that can never be repaid. Since 1971, when the last link between the dollar and gold was severed, the world has operated on faith, the belief that government promises are worth more than physical assets.
Oh, but faith is a fragile foundation.
As inflation erodes the purchasing power of every major currency, and geopolitical tensions shatter global trust. The rules-based order is being replaced by a resource-based reality. When the world's most powerful, central banks begin to distrust their own paper, it signals a systemic shift that will redefine wealth for the next century. Historical rewind, the great severing to understand the collapse of the present. We must look to the summer of 1944 at Bretton Woods. There, the world agreed to a system where the US dollar was pegged to gold and every other currency was pegged to the dollar. It was an era of unprecedented stability until the math failed. By 1971, the US had printed more dollars than it had gold to back them. In a move that changed history, President Richard Nixon temporarily suspended gold convertibility. This Nixon shock birthed the era of infinite liquidity, allowing empires to fund endless wars and massive deficits. But history shows that every unbacked currency eventually returns to its intrinsic value, zero. Mechanism breakdown. The debt trap. The mechanism behind this return is a phenomenon known as Gresham's Law, the idea that bad money drives out the good. For decades, the US dollar enjoyed an exorbitant privilege as the world's reserve currency, essentially exporting its inflation to the rest of the planet. However, as debt-to-GDP ratios in the West cross the 120% threshold, the system has entered a debt trap. Central banks can no longer raise interest rates to fight inflation without triggering a total sovereign collapse. In response, nations like China, Russia, and India are moving their good money into the shadows, accumulating physical gold to shield themselves from the impending devaluation of the digital dollar. Hidden forces in the shift to the east. This is not a conspiracy. It is a geopolitical survival strategy. The weaponization of the dollar through sanctions and the freezing of foreign reserves has sent a shockwave through the global south. Nations have realized that if they do not own an asset that carries no counterparty risk, they do not truly possess wealth. The BRICS Plus nations are now openly discussing a new reserve unit backed by a basket of commodities. With gold as the primary stabilizer, they are moving from a system of inside money, which is someone else's liability, to outside money, which is an asset that requires no one's permission to exist. Climax and revelation, the great revaluation. The big truth that the public must understand is that the debt will never be paid back in today's purchasing power. History provides only one solution for a debt crisis of this magnitude: a massive revaluation. Just as the US raised the price of gold from $20 to $35 in 1934 to liquefy the banks, a similar reset is likely approaching. By revaluing gold against the trillions of unbacked digital dollars in circulation, central banks can effectively wipe the slate clean, though at the cost of the middle class's savings. This is why gold is returning not as a commodity to be traded, but as the final anchor for a bankrupt system. Impactful ending. As the golden anchor is dropped back into the turbulent waters of global finance, we are reminded of the timeless words of J.P. Morgan. Asterisk, gold is money. Everything else is credit. Asterisk. After a 50-year detour into the world of pure credit, the world is finally coming home to the only truth it has ever truly known. We are not witnessing the death of money, but the rebirth of accountability. The question is no longer if the gold standard will return, but who will be left holding the paper when it does.